Investor we're about to hear from also says the market is looking a lot like it did last summer, but that could be a good thing. Brian Barish is president of Cambiar Investors. He runs the $1.5 billion Cambiar Opportunity Fund, which, by the way, beat 97% of its class over the past year. It's a good performer. Welcome to Street Smart, Brian. Good to have you here. Do you care about kind of these macro stories, whether it's the headlines out of Greece or whether it's stories about our economic backdrop?
Well, I care about them, but probably nowhere near as much as a lot of the people actively buying puts and calls and futures on the stock market trying to guess the near-term direction as it relates to headline economic news.
So, okay, got it. So, I mean, you've got a great performance here right now. I mean, give us an idea of what really kind of guides you in terms of what you're picking.
Well, sure. We really build the portfolio stock by stock based on our view of what are good businesses that are going to prosper and thrive in the overall economy and deliver some good value to shareholders. That job has been made actually quite easy in the last couple of years by the amount of noise coming from macro headlines. So in the intro, you suggested that, and I agree with this looks a lot like last summer. We've got a growth scare. We've got noise coming out of the Eurozone. We've got commodity price volatility. But ultimately, what we believe since early 2009 is that the business cycle, once financial conditions stabilize, which they did a couple of years ago, would take hold, and typically those run anywhere from 4 to 7 years. We're not even 2 years into this one, and we think it's got a long ways to go.
Brian, hey, Brian, let me bring you back into the fold here. I mean, technology, is that an area that you guys are finding some opportunity right now?
We are. Technology has been a very tough neighborhood. A lot of the old line technology companies like Microsoft or Hewlett Packard have just been terrible performers in the last few months. There's clearly a paradigm shift underway where the computer is going to morph into more of a mobile device with your content following you around. So we've focused on companies that are supplying key items to that paradigm. One name that we like a lot down here is Corning. They make the flat panel glass for TV sets, for iPads and so forth. And they're also big in fiber optic supply. Stock's been really beaten down to about an 8 times PE, which is typically where it's bottomed out in the past. So that looks pretty interesting.
Hey, Sheila, let me bring you into this because you've been actually following Corning as well.
No, absolutely. Just want a quick reminder for our viewers of what Corning does. They make all those imports for telecom and tech industries. The LCD glass panel is really what people focus on with Corning. And that's also one of the reasons the stock has taken a beating. So the forecast for flat panel TV's been coming down. If you take a look at the pricing trends, they have been flat. Now, this is despite management expectations that they would be able to increase pricing. So all big reasons why you can see that stock down over 8% in the past 6 months. I will point out, though, Brian is not alone in liking the stock. In fact, if you take a look at analyst ratings on it, 14 buys, only 1 sell. Brian, my question to you is, a lot of people think that there's only one direction for Corning to go, and that is up. My question is, what's the catalyst going to be? I mean, the numbers from the TV industry not getting any better.
Right. Well, I think you're going to have to print some numbers right now in order to quell the bears on this name. I've just noticed in general, whether it's Corning or semiconductor companies or machinery companies, as the economy hit a slow patch in the U.S. and also in other places, you've seen a lot of companies that are geared to unit growth stories really roll over. We don't think the soft patch is going to be sustained. There's a lot of anecdotal evidence that it's going to turn around in the third quarter. They were also hit pretty bad by the earthquake impact, where a lot of TVs were just unproducible in Japan for several months. And so that situation is also getting sorted out right now.
Hey, Brian, if we do get a turnaround in this economy, do you then like financials because they've gotten hit so hard and it seems like everybody hates them? It'd be a great contrarian play.
It would be a good contrarian play, but I'm probably not going to play it. The financials are probably, worth a flyer if one is so inclined. But, we've stayed away from them. That's one of the reasons we performed as well as we have. You're in a classic post-bubble situation. We had too much credit. We had too many houses. banks and other financials were over-earning in the early to mid-2000s, and they're just not going to earn as much as they could have before. They're going to have a lot of restraints put on their behavior by regulations and by their customers. And net, we just don't see a ton of upside. Again, they're probably worth a trade if the market bounces. I would expect them to bounce a little bit too, but not much beyond that, no.
Brian, we just got about 40 seconds left here. Energy, I noticed Hess and Halliburton are two of your top holdings here. We had Adam talking about Williams Company proposing to buy all of the outstanding shares of Southern Union. Energy, is that an area that you're finding still more opportunity here?
Yeah, energy is really interesting right now. I think Hess with a 6 in front of it. I don't know where it closed today, but that's the metaphorical fat one over the plate. You know, the energy issues that we're facing are long-term in nature. There's a tremendous amount of demand growth coming from Asia, not a lot of supply coming on. Now you've got manipulation of that supply by government agencies. They're growing their production in some very interesting places and making some nice discoveries, and very attractively valued here.
We got to leave it on that note. Brian Barish, thank you so much. We really appreciate your time today.